From Dubai Internet City.
This is the Business Breakfast.
Download the app or visit Bayut.com.
Yeah, opportunity for us now to focus on all things real estate, all things property. No shortage of big headlines for us to digest. In the first quarter of this year, the momentum of 2022 certainly seems to have continued into 2023. But they're just the headlines. The numbers themselves, they don't lie. And that's why we turn to our friends at Dubizzle and Bayut to get more from that latest data, the latest numbers. The Director of Sales for Dubizzle and Bayut is Fibha Ahmed, who's been kind enough to join us live here in studio. Happy Monday morning to you, Fibha.
Same to you, Tom.
Good to have you with us this morning. Right, we have an opportunity to look back at the quarter that was. Q1 2023 numbers are available. How have we fared in the property market?
Property market in the first quarter of this year has not failed to keep us very happy, I would say. And that is across all the major Emirates, which is Dubai, Abu Dhabi. And there is a little bit of activity in Ras Al Khaimah. In Dubai, we've seen that in the affordable segment, prices have increased by 12%, whereas in the luxury segment, we've seen a 24% increase in prices. We have seen a very interesting stat that I looked up last night. In the last quarter of last year, we saw transactions which were above 30 million dirhams, roughly sitting around 51 transactions in the last quarter, average of about 48 million dirhams. In this quarter, I quickly did the numbers. The transactions for properties above 30 million dirhams have gone up to 70 in total, and the average has gone up to 63 million dirhams. So there is a lot of interest in the luxury segment. Every 2 weeks you see the most expensive property sold, be it in a branded residence in downtown or be it the Bulgari Lighthouse. So the interest is definitely there, very, very active in the luxury segment, and affordable segment also seeing an uptick in Dubai.
It's interesting, isn't it, that we are getting much more sort of interaction with a number of the official entities and departments that help to manage real estate here. The Dubai Land Department, very forthcoming with their numbers and regular updates from the DLD. What does that tell us about the state of the market, the latest figures from Dubai Land Department?
In the latest figures, we see that in Dubai, the interest is very, very skewed towards off-plan market, especially the luxury segment. We all know that there is a shortage of secondary market. People who are looking to buy a secondary property, be it for investment or to live in, will have to face, in most cases, a tenant who's extended their lease. On the rental side, we've seen since the rents have surged so high in the last 12 months, people are very, very keen to renew their tenancy contracts rather than go for a new one. So that leads to a lot of people looking at the off-plan segment, or probably if they really want to buy right now for the secondary market, they're willing to pay a premium. So the activity is there for secondary. The activity is very, very active for off-plan, branded residence, even mid to affordable segment.
Let's talk rents if we can, specifically here in Dubai. We know that we saw an increase in rents last year, certainly towards the end of the year. Has that continued into Q1 this year?
Absolutely. We've seen some astronomical increases in the luxury segment. Dubai Hills has recorded up to 60 to 80% increase in rents, with some new inventory also coming into that area. What we've noticed is, interestingly, same time last year, we saw about 122,000 tenancy contracts registered. Out of those, you had about 52% on renewals, and the rest were new contracts. In this quarter, we've noticed 134,000 tenancy contracts. So that number has gone up, whereas you would see that 61% of those are renewals. So going back to my earlier comment that because of the rise in the rents, people are very, very actively looking to renew their agreements. Thanks to RERA and the regulations, you are kind of protected against astronomical increases from your current landlord. However, with new inventory coming up in Dubai Hills and some of the affordable areas, we have seen a decent activity on the rental side as well.
Dubai market certainly booming, that's for sure. Numbers don't lie there. What about our near neighbours? What about heading down to the nation's capital? How's the Abu Dhabi market looking?
If you compare Abu Dhabi market to Dubai, there is interest in the luxury segment, similar to Dubai. There is interest in off-plan, similar to Dubai. One thing that is different in the Abu Dhabi market is that the affordable segment in apartments and villas has seen a drop in prices. There's roughly about 16% drop in the affordable segment, so it makes it very, very friendly for tenants as well as new-time entrants to the market in terms of buying their first home or their investment. Luxury segment, which is your Yas Island or your Saadiyat Island, still sits at an increase in rents as well as buying of property. Off-plan has really picked up interest in all segments. I think this is because a lot of developers are becoming active in Abu Dhabi. Aldar is going towards sustainability with a very interesting project they launched recently, The Source, which is a holistic well-being concept. That is something to keep an eye out for. Then you have your super luxury Saadiyat Island, which is a cultural hub. So Abu Dhabi is to keep an eye for with a wide variety of investment opportunities in all segments.
And you mentioned our friends in the north, a bit of activity in the northern markets as well. How has Ras Al Khaimah fared, amongst others?
Ras Al Khaimah has made headlines in the last 12 months or so with very interesting announcements. Of course, the Wynn Resort, that's going to be coming up in 2027. People are looking forward to what that brings to the hospitality segment in Ras Al Khaimah. Ras Al Khaimah is known as the Nature Emirate. I think very soon it is going to continue to develop its reputation as a tourism as well as entertainment hub. Prices have gone up in the three most popular areas in Ras Al Khaimah, namely Hamra Village, you have Marjan Island and Min Al Arab. There are some off-plan projects also coming up in these three locations. You can find a decent villa, which is overlooking the water, roughly in the range of 3 to 4 mil. And rents are also kind of very stable there. Very modest increase, single digit, like Abu Dhabi. But definitely in the next couple of years, Ras Al Khaimah is going to be the hidden gem that's going to probably become the crown gem when it comes to entertainment.
And I suppose the million, billion, trillion dollar question or dirham question, whatever it might be, is about momentum. We talked about that momentum 22 into 23. We've seen that in Q1 of this year. However, Q2 taking into account Ramadan, the Eid breaks as well, and then, of course, the traditional slowdown into the summer months. Are we going to see any sort of change in the market, or is the evidence suggesting otherwise?
In the month of April, we had a relatively calmer start, I would say, because of the 2 weeks break, which is the spring break and the Easter break, with the numbers that are flowing in, school registrations. Or the other day I was listening to one talk show where it said that there were 25% increase in inquiries for schools. I see people moving. You've seen the tenancy contracts number go up in Dubai. So the momentum is going to be there. There's going to be massive interest in off-plan, and people are going to continue to move and upscale their lifestyle.
It's going to be a busy one, that's for sure. Not just for us, but also, of course, for Fibha and the team as well. Can't thank you enough. Thanks for your time. As always, Fibha Ahmed is the Director of Sales at Dubizzle and Bayut, joining us live here in the studio to bring us all the latest in the world of property.